Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor. Really pleased to have Michael Oliver with me once again. It's olivermsa.com, olivermsa.com. Go there to pick up on Michael's work and subscribe to it. I think you'll be very glad you did. If you're a serious investor anyway and have a fair amount of money in the markets, it really behooves you to check out Michael's work. He provides a little glimpse of what he does here on this show, but if you really want to benefit from his intellect and all his hard work, you should sign up for his wonderful letter. Thanks, Michael. Thanks for joining me again.
Hi, Jay.
You know, you often provide a picture of a beach ball exploding out of the water. You talk about markets that are suppressed for long periods of time. And today, when I looked at my Kitco screen and saw the explosive move, gold up almost $40, I said, wow, that looks like a beach ball submerging, that had been submerged underwater. I know. I think that a $40 move, given gold's suppressed state, is not anything to get extremely excited about, except those of us who have been long gold have been long suffering. So it is energizing, to say the least. But what are your thoughts on gold and, of course, silver as well, which took an even larger, almost 4% up at one point today, I think. What are your thoughts on the precious metals now?
I think that the gold and silver seeing their lows. Okay, that's step one. We had enough metrics to cross, again, not looking at price, but looking at momentum and the structural action of momentum. Even back in September, that argued, especially that silver had seen its lows. And the ratio between gold and silver has shifted, favoring silver. That occurred back in September by our metrics. And usually when that shift occurs, where silver shifts from an underperformer to an outperformer, and we have ways to measure that, not just looking at the spread chart, that usually coincides with or leads a net trend upturn in the two metals, with silver leading. Similarly, on the downside, if silver shifts to an underperformed status versus gold, generally they'll both sort of come under pressure. And, well, that process has been underway downside since early 2021 in silver versus gold. But in September this year, it flipped back up. So I think we're in a fresh upturn. Right now, everybody, if you stand back and look at price charts, which most people do, they see silver in a block of ink that had been roughly 21.5 lows to $30 highs, a couple of them up there at 30. Right now we're at 21.5, so we're trying to punch back up into that range, the price range. And that is probably significant if you do. Today's traded up there, but, another 50 cents in silver, and it's back up inside the old, back at home again, okay? Meaning it's leaving behind what the residue that it left down there. Okay. But otherwise, when you look at the price chart and you say, well, where's the explosion point? Where's the point where I know silver's just going to leave the earth and go to $50 and $100, 200, whatever? And you see these two highs up there around 30. So, I mean, that's pretty far up there. So you have to wait a long time maybe, or not a long time maybe, but a lot of price is gained between now and then before you finally say, oh, okay, now I better be fully back in. We've got some numbers that we specify to our subscribers. We will shortly, that are based on long-term momentum of silver that shows a level roughly in the middle of that ink, which doesn't look relevant on a price chart, but if you get up in there, and we've got a very specific level, if you get up above that certain level, it says you're gone. And in other words, you're not going to have to wait to get to 30 before you realize it's going to break out. And it's not, we're not there yet, but it wouldn't take a lot. And I suspect we're going to see it. What I like especially is that the stock market, when you look at all the assets, the major portfolio assets, the 60-40 stocks, bonds, that kind of thing, they're all down big double digits. And you get rallies here and there, but they're basically, it's been a very bad year for portfolios. Real estate, muni bonds, high-yield corporate debt, S&P, NASDAQ 100 especially, and T-bonds, all been clobbered. No safe place to hide. Well, right now, gold's down on the year, down 5.9%. Okay, anybody who is a long gold only coming into the year, down 5.9%. Everybody else is down 20, 30%. Why is that? why people should be asking that question. Why is it that if the Fed is out there to pounce on inflation, which they poorly define only as commodity-based inflation,
right,
which is ridiculous because they printed 12 years of stock price inflation. But, okay, how come it is then that the Bloomberg Commodity Index is up about 17% on the year and gold's only down 5% if their target is that stuff? Obviously what they're doing isn't working. Well, actually, it is, because what they're doing is they are breaking the inflation bubble.
Right, the inflation bubble.
Stock market bubble.
Yeah. Right, the overvaluation of equities, yeah.
Yeah, and unfortunately, it's past the point of no return now. You're not going to, even if they reverse policy, which they will, they'll panic at some point, because too many major assets will go illiquid. They've already, Yellen's already said, she's very concerned that the U.S. Treasury bond market is becoming illiquid. That's the most dangerous word in markets. It's not just something's down, but it's illiquid, because that means it's not functioning as a market. And it's still, every time they try to rally the bonds, they just don't rally. And it's spooky for them.
Yeah, well, why would the Treasury market be a liquid, well-functioning market when you're holding rates still way below the inflation rate? So it's not surprising, really. And the inflation rate is probably higher than what the government numbers give us. But I have to ask you, Michael, because you mentioned the commodity, the Bloomberg Commodity Index is up 17%. I suppose a big part of that is oil. Is probably oil and gas.
A big part, yeah. And they're doing what we basically thought they would do, which is to say, hang in pretty high. It's a trading range. It's violent. But the problem is, for the world economy, it's not whether they explode from here, it's whether they just don't go down, because you're already at very high levels, the kind of levels that, choke things. And so it's not an issue of, whether oil goes to 130 again or 150. It's a matter of just, does it hang around 80, 90, 100? That in itself is choking. Natural gas has had a sharp pullback, but it looks like it's stabilized. And but it's still, where is it? It says trading $6.50 to $7. A few years ago, it's trading $2, $3, $4. So it's much higher, and therefore it's choking, regardless of whether it explodes from here. Also, I'd be focused on the food commodities. As a next place to be in the commodity sector. But I remind your listeners that in the late 70s, I think this would be true this time, gold and silver handily beat the commodity complex. So commodities have had a big year and a half, 2 years of upside here. In fact, they turned up in late 2020, way before Putin ever moved on Ukraine.
Right.
And gold didn't. But gold already had a run from $1,050 in early 2016, late 2015, up to 2070. So it already doubled. But commodities were still in the hole. So it has its own life, and I think it's coming back to life again.
What do you think the upside might be within the next year or two for gold? Do you have any ideas?
Off the page. I have no. I mean, I can just tell you. I've said this before. There's 3 prior bull markets since the early 70s, so the last 50 years in gold. There have been 7 to 8-fold advances in gold, measuring from the bear low that preceded the bull market high. Three moves that have been 7 to 8-fold gains in gold. Well, if we measure from 1,050 low in 2015, the bear market low, well, you do the math. $8,000? And if it did that, is it extraordinary? No. All it's doing is what it's done 3 times before.
Right.
And
interesting.
We're in a far different world than we were then. So it wouldn't shock me that it goes way beyond something like that.
Well, Ray Dalio and others are concerned that maybe they've pushed this fiat currency as far as they can push it. And if Janet Yellen is really worried about a lack of liquidity in the most liquid market, arguably it had been, the U.S. Treasury market, the most liquid, most deepest market in the world, And maybe Dalio is right. Maybe we're running to the end. There are limits to everything, as in physics and in economics as well. And maybe we're getting to that point. In fact, we were just talking a little earlier. I was just mentioning that that the Russians and the Chinese are working on a digital currency to get rid of the dollar, and they're trading between the two countries now. So they've been importing tons and tons of gold. The gold has been moving from the east to the west. But Michael, I want to ask you that our show today is sort of like, in this game of chicken that Powell is playing, how much further do you think he'll push it? Or do you think that maybe this thing that Yellen is talking about, the need to raise rates to keep the U.S. dollar and the treasury markets viable, is maybe part of the reason he's pushing it further than a lot of people thought he would?
Well, Nouriel Roubini is a fairly well-known economist, and I don't always agree with him, but he was on Bloomberg like a week and a half ago, and he's basically, he espoused the same thing we've said, and that is that this is not just another 2007, 2009 bear market. This is a disaster because of what has preceded it, the errors that were compounded. And he added something else that we don't try to get into, but we've mentioned, and that is the political divide. And I won't get on either side here, okay? Frankly, I'm a libertarian, so I couldn't care less at either side.
Right.
The divide is never, have we seen a divide like this before? There's not going to be agreement. There's no way there could be an outcome that is calming and maybe not even an outcome that's peaceful. And Roubini hit on that. He said that if you'll notice in the world today, even in major countries, the political divide is getting radical. It's no longer moderates are in play. It's always like extreme, like what just happened in Brazil.
Right.
You had a Trump-like president get kicked out by a guy who's a communist. Okay, so there wasn't a middle ground there. It was either or. And that's, I think what we're seeing here is a divide that will not reconcile itself. And that's a variable that's not booked into the market.
Yeah, that's very hard to factor that in, and I don't know how you do that. I guess you just have to be prepared as best you can be. I would certainly think you want to keep out of debt. That's something people should have been trying to do for a long time. But, Michael, the middle class is having to go back on their credit cards now because they can't make ends meet. And you just have to wonder how much longer this game of chicken can go on. David Stockman said on this show some time ago, and he was really sort of surprised me when he said Powell isn't going to back down anytime soon because they're really afraid of this inflation thing, and the masses coming after him with torches and pitchforks, is the way David put it.
I think it's that pictures might even be literally true.
Yeah,
at some point, because a lot of mainstream economists have turned on the Fed and said, "Hey, you've gone too far, boy.
Yeah.
You've created a disaster. It's not working." And as long as Powell keeps his chin up like he's in charge of something, and he's always been wrong, by the way. I saw some quotes from him over the past several years in the historical context, and every time he utters an outlook, it's wrong. Okay? So anyway, not that it matters why we have a Fed in the first place, I don't know. But
I think I do know. I think the Fed helps the game of empire. It helps to fund it. But anyway, Michael, just with just 2 minutes left, a couple more things I want to ask you about. I suppose fertilizer might go along with food. Fertilizer stocks, possibly.
Yeah.
I know you track some.
Well, we suggested buying those back in late 2020, so they've gone up meteoric. So it's not. I'll have to caution people, if you chase oil, energy, and especially fertilizer stocks, which have had ballistic moves since we put out our buy signal, you're coming in awfully late. And so the risk-reward is really changed, where, they may go higher, especially as the crisis worsens, but you're not entering at an optimal place. Now, I think that may be the opposite now in the case of silver and gold. They've had a good pullback. They've wasted 2 years. They're not hot, upside hot, and therefore I think you buy the basement here. And I think silver was in that status, laboring under $20 for the last several months, sideways. I think a lot of major investors said, I'm buying it. They didn't care whether it was turning up right then. They just said, I'm in, because it's not going to go lower. And therefore, so there's view markets that way. So fertilizers can go higher, but I think they're high risk, less reward. Same with the energy sector.
Yeah, sure, understood. Michael, some analysts are suggesting that maybe it might not be a bad time to buy some TLT. I guess it depends. If you don't think the world is literally going to hell, if you think it is, and if you just take a really dire position and interest rates could go to 20% or higher, then maybe that's not a good idea. But the idea is that we're going to be in a recession in 2023, and interest rates might not go much higher, and you're going to get that 3-4%.
Yeah, there's a risk, though, and I think the risk is that you get spiked. In other words, that it gets out of control to the point where, with that thought in mind, if you enter here, maybe in 6 months you'll gain money, but between now and then they might spike you so badly on the downside in a crisis-type situation. And that's the kind of event that would cause the Fed to basically collapse in terms of their policy direction. And maybe we need that.
Yeah.
Maybe we need that.
Yeah, maybe it's forthcoming. Nature has a way of taking care of itself. When excesses are not permitted beyond certain limits,
there is a
things break down.
There. Yeah.
There is a reality, even if people don't want to face it. We try to help people do the best we can to help people realize that things are not always honky-dory, and we want to try to prepare as best we can. There's nobody that does a better job than you, Michael, helping us in that regard. So thank you very much once again for being with us.
Thanks, Jay.